Hello, I'm Henry Bluefield and welcome to the channel. So today I want to run into a way of managing your cash flow, managing your money coming into your account, and how to set aside for various different things, whether it's a rainy day, tax or investments. This is something that when I learned it, revolutionized how I understood business. It revolutionized how I understood how corporations work and manage money in order to generate profits from other aspects rather than just your service. Before I learned this system, I just understood my business as an opportunity. So my business, if you don't know, is I run a garden company, and I just understood my business as you grow, we build as a team, we provide the service of maintaining gardens, landscapes, whatever it is. And by doing more work, we can diversify into different services as we grow. But ultimately, by providing the services that we provide is how we generate incomes, how we generate profits. And that's where the growth is. That's where the money is. And that's where wealth is built. However, by learning this system that I'm going to talk you through today is how I realized that wealth can be created in a universally different way. It's something that we can all utilize, whether you're an individual, whether you're a company, and it doesn't matter what your company is, whether you're a limited company, a sole trader, an LLC, that does not matter. And it does not matter what service you provide or what industry you're in or what products you manufacture. It's a case of this system, this structure works really well, and it can help you as an individual if you do have a few money problems, or if you don't know how to quite look at balancing your money out and setting aside different things, or what you need to set aside. So this is just a basic start that we can jump into for some business basics of how to manage cash flow and set aside money in the right way, calculated correctly. So let's dive in. Okay, so you'll see the diagram come up on the screen now. So what we're looking at in account one is your current account. So this is where all money comes in and money goes out. Same way, if you've just got a current account you're working through now, same sort of system. You just have your current account set up with the bank you're banking with, and your clients, your customers, or if you're applying this as an individual, this is where your wage comes in, and then you've got all the money going out. So as an individual, this is your bills, your monthly payments for your phone, your car, whatever that is, when you go and buy something at the shops, some clothes, food, whatever. As a business, this is where your clients pay you, as I said, but also then where you make your payments in terms of paying suppliers, manufacturers, or other companies you do business with, as well as wages, salaries for your employees. Account number two is what you take off for saving into your tax. So for example, your VAT, if you're a VAT registered company, this is where for every invoice you send out, you set aside 20% for when you get your VAT bill, or if you're in a different industry like hospitality, for example, 12.5%, whatever category you fall in with VAT, you set aside that money into the second account to set aside for your VAT bill. The next thing is corporation tax and any other taxes depending on where you are, what country you're in, the different taxes. Some areas have other taxes like town, local taxations. But for me, in my company, I just have to deal with VAT and corporation tax. So then it's a case of, as I said, setting aside any money you've invoiced on invoices that is VAT, you send that into your account. This is something I recommend like once a month. And then next to corporation tax is a case of setting aside money. If you use accounting software like Xero, it's a lot easier to calculate, but you want to be able to monitor and estimate, get a gauge of what your tax bill is going to be for each year. And if you can calculate that by keeping on top of your accounts, that's really wise. But different people have different preferences depending on what your own sort of tolerance is for risk or how well you manage your finances. But if you do something like setting aside a certain percentage each month, at the end of each month, look at what your profits are and just set aside a certain amount of money. Or if you know over the course of the year you're going to sort of reach a rough amount of money, if you sort of have a bracket, say your tax bill is going to be 10 to 15 grand, if you can set aside 15 grand, you know that you're good then for your tax bill coming in. So once you've got your sort of taxation worked out there, how you're going to set aside money for your VAT, for your corp, and any other taxes that you will be susceptible to, you can set those aside in your second account, which then brings us on to your third account. This is your rainy day fund. So the idea that if any unforeseen circumstances, such as another pandemic, a lot of businesses were hit quite dramatically, others affected differently in terms of how the pandemic played out for them and what the restrictions occurred in different areas and how that impacted the flow of business. So setting aside your rainy day fund is something where if you can put aside 3 to 6 months cash flow into a savings account to then ensure that if anything does happen, you know that you're secure then for those number of months. Now, when I say 3 to 6 months, it can be 3 to 6 months, it could be 12 months. This is something that, dependent on your business and how costly you are, what your overheads are like to run, and how the relationship is you have with suppliers or customers in terms of when the payments go out and when your payments are received in from clients and customers, that can impact how much you'd want to forecast. In my business, running a garden company, the regular monthly service we have for clients is quite swift. We'll generally get paid on the day, within the week, or the sort of worst we have is 30 days terms with customers, but some can be late, as you'd expect. So generally we find that we get paid pretty quickly, and then our overheads are relatively low. We're not manufacturing anything. We haven't got to buy a lot of materials unless we're on sort of landscaping works, which is always oftentimes is taking money up front. So in terms of the day-to-day service of providing maintenance, the overheads are relatively low. And in terms of unexpected costs, it is, again, something that's relatively low in terms of equipment going wrong or needing repairs, replacements. So it can get quite expensive if a lot happens at once, but generally, if there is 6 months set aside, we're pretty safe there. We haven't got to worry too much. Even through the pandemic, found that the company wasn't impacted too much in the sense that we were still able to work throughout the whole process. So we never did suffer that much. So for my sort of industry of garden company, if you've got 3 months set aside, you probably are quite secure. So that's 3 months of like your fuel costs, your wages, if you have like electricity bills, other bills associated with your like yard, your office, etc., as well as like rents and such. So anything you pay as an overhead on a monthly recurring, set that aside in your rainy day fund. And hopefully it's something that you never really have to dip into, which does kind of feel like pointless money sitting there, but it's that security of knowing that if something were to happen, like we've seen in the recent years of having a pandemic, which is something that probably none of us expected to experience in our lifetimes only 5-10 years ago. Your fourth account, which becomes very exciting. This was revolutionary to me in terms of when I was taught this way of setting money aside, it suddenly opened the eyes to me in terms of how companies work, how big companies operate, and where you start to see that profits can really be made in something outside of your day-to-day services. And applying this as an individual, that works the same. Once you've got that rainy day sorted, you've then got this fourth account, which really is where you can look to make even more money and maybe even replace what you can earn in your day job. And it's the same way for companies. This just opened my eyes so much to how big corporations can actually make a lot of money, and where you may find that day-to-day runs of the company may not be a huge component in the profits. It could be in this account that actually makes it, and that is your investment account. So this is where once you've got your money set aside for tax, your money set aside for the rainy day, once you've got those two accounts in place, you then go into your investment account where you can start setting aside money that the company knows it won't need, it's not going to need for paying tax, it's not going to need for the rainy day. So it's something that you can start using to invest in other things, whether that be other companies, in property, in the stock market, whatever you want it to be, in crypto, whatever you want it to be in, you can start to invest in. But obviously this comes with a whole different palette of risk and an entire different category in itself in terms of analysing what opportunities there are, how you want to move forward with investments, and as well looking at like what kind of time that will take up. If you are running a company, then how much time are you going to have to look at these investments, and has it got to be something quite passive? This is something that I applied in my company, and while it could look quite daunting and confusing in terms of having these different accounts, having 4 accounts, and then especially if you set aside your tax account into different subcategories and different accounts, it's not necessarily about having those. You could keep them all in one account. You could do that. It just might get a bit confusing. Sometimes you can, if you are prone to like forgetting and just suddenly looking in there and going, oh, we've got tons of money, yeah, we can spend that, and it's not a problem. Or if you're looking at investing and moving forward and building your company, if you suddenly forget about the corporation tax that's coming up, can be a bit of a problem. So what I did personally, I had this system in place, but I just had 2 accounts. So I had my current account that I kept money in for everything to do with tax and the day-to-day running costs of wages, bills, paying for new equipment and repairs, that sort of thing. I kept all of that money in the current account, and then I set aside a separate savings account that had the rainy day fund, which then eventually became the investment fund. I wouldn't recommend that for everyone. The only reason I did that was just because I've always been so frugal with money and so careful and limited with how I spend. And in addition to that, like my company all sort of was starting to build during the pandemic. So literally at the start of the pandemic was not long before that I'd taken on my first staff members, my first employees. So I was very new to it. And with the pandemic, I sort of was getting quite nervous and cautious. And so I was playing over cautious in the sense of really reducing the spending that we were doing. I say all of this, and when I look in reflection, we was still really growing, and there was a lot of investment in terms of expansion and buy new materials, buy new equipment. So I wasn't really that cautious, but I did always ensure that I had a big buffer in the account. So like that rainy day fund that I talk about, that rainy day fund was really more of, rather than like 3 months, I was starting to try and see if I could build like 6 months, 9 months. If something does happen with the pandemic, if it was to intensify, if it was to exacerbate, or if the lockdown restrictions became ever stricter and we were unable to work, it would mean that I'd still be able to offer some sort of work, whether it was at the yard, whether it was just like going part-time, because my strategy, my main focus was keeping everybody employed. I didn't want to start letting people go, even if that meant reducing the workload. But if I could build a strong enough buffer, it meant that we could have days at the yard just sharpening equipment and looking after the tools or doing some training. So that's sort of how I worked around. As I said, I had 2 accounts. You can do it differently yourself. You can have the full 4 accounts, 2 accounts. I wouldn't advise 1 account as well. You don't want to keep that much money in a current account, but speak to your banker and get advice there, as well as your accountants. And this is something that definitely would be good to run through with your accountants and look at your accounts and see what sort of money. And this is definitely something that will coincide well with having accounting software, so that you can keep on track of your numbers, know what your profit margins are in terms of gross margins, net margins, what your recurring costs are, how much that is per month, what your revenues look like per month, so that you can calculate all of this accurately and know what sort of money you need to have set aside. So I hope this video has been helpful. I hope it's given you a great insight. It's something that when I learned it myself, it opened my eyes so much and was just so revolutionary. And it really gave me clarity over how big corporations can operate and make even more money. As a course of, if you can reach to that 4th investment account, it is where you start to realize how money can work for you and start making more money for you once you start putting it into other assets to therefore give you a return. So it's really great. Let me know if you've got the system in place, or if you've suddenly learned something today on these business shorts. I want to go into a lot more of them. If you have liked the video, please drop a like, leave a lovely comment at the bottom, and of course, please do subscribe.